The Swiss-Egyptian cooperation is mutually beneficial, and I'm looking forward to strengthening and deepening our economic relations. Thank you very much for your attention, and I wish you a great conference.
Your Excellency, thank you very, very much for that very informative presentation and speech, very inspiring, and let us always be able to share experiences and knowledge and know-how with our global partners for us to be able to move forward. Competitiveness and global competitiveness starts at home, as we always say, and national competitiveness is extremely important. And as His Excellency mentioned, the private sector plays a tremendously important role in the economic growth of any nation. And today we have with us a major financial global institution that represents, again, the most competitive country in the world. So I'd like to thank from the very bottom of my heart for the time that he has allocated to us, Mr. Micheal, Bolliger, who is the Deputy CIO Emerging Markets and Head Emerging Market Asset Allocation, CIO Wealth Management at UBS. If you would join me on the stage, thank you.
Okay, thanks. Good morning, ladies and gentlemen, Chairman, Your Excellencies, guests and colleagues. It's a great pleasure to be here. When they called me a few weeks ago and asked me whether I can join this event here, somebody told me it's going to be big. It's going to be a big event, and I mean, looking at this group of people, that's most definitely true. So it's a great pleasure to be here. And I'm also excited to see all these things going on here. For today's speech, for today's presentation, I'm wearing sort of two hats. One hat is my role as the head of asset allocation for the emerging markets at UBS. In that role, I'm really excited about all the things that currently are going on in Egypt and in the region more broadly. There is a lot of interest popping up from our international clients, even from our Swiss clients who tend to be more conservative in new investment opportunities that might emerge from this region, from the intention to move away from a commodity-driven, from an oil-dependent economy into a more diverse, internationally oriented economy. So the people out there, they're really interested, they're excited about what might come. Currently, of course, the headlines are a bit dominated by the developments in Saudi Arabia. I mean, this is clearly the biggest market here in the region that generates most of the interest here globally, but also Egypt. I think given the size of its economy, given the size of its population, given its very interesting location also geographically, you're interesting because you're connecting the Mediterranean Sea with the Red Sea. You're also connecting North Africa with the Middle East, so that's a very interesting location, and it's very similar also to where Switzerland is located in the heart of Europe, connecting the north and the south. So there's a lot of good takeaways from that. So people are interested, and people look forward to see this region developing and looking for new opportunities that might give us also then again opportunities to invest. My second hat that I wear today is the one of, say, a Swiss ambassador. I shouldn't use that word too easily in this round here. That's clear. So I say it's maybe a Swiss representative, a person who has lived in Switzerland for 40 years, for more than 40 years, who knows the country very well. And in that role, I want to give you some thoughts from my side on things that I think work very well in Switzerland and that could possibly also work in Egypt. And so this is then also the title of my presentation. The title is Made in Switzerland, and I'll bring you my thoughts from abroad on how I see Egypt as a sort of an international investor and also as a Swiss citizen. Now, at first thought, you might think, what could two countries learn from each other? I mean, the differences are huge. When I left Zurich on Monday morning, it was about 40 degrees, light snowfall, and then 4 hours later I arrived at Cairo airport, and the captain of the plane told me it's 44 degrees, and when I left the plane I realized that that's actually true. And then on the way from the airport to this hotel, I've seen as many cars as I've seen in my previous life before. So the countries are as different as one could possibly think. But then at second thought, there are also quite a few parallels, I'd say. One is the geographic location, as I already mentioned. So this provides huge opportunities for trades for both Egypt and Switzerland. Both countries have to deal with diversities, with cultural, religious diversities in one form or the other. So that's also an opportunity here where we can learn from each other. Tourism, as the ambassador already said, is a very important source of revenues in Switzerland, but also in Egypt. I think Egypt has to offer really a lot to international tourists. I myself am a dedicated windsurfer, so I've been at the Red Sea windsurfing many, many times in my life. It's really one of the best opportunities in our EMEA time zone, and you can combine culture with entertainment, with leisure, as probably a very few countries other than Egypt can do. And then the last thing that I would like to highlight as parallels is the exchange rate has played and will continue to play a very important role both for the Swiss economy and also for the Egyptian economy. So here there's also interesting parallels. So what I want to do in the next 15 minutes or so is to jump a bit back and forth in my role as investor, but also in my role as a Swiss citizen, and highlight one or the other thing. Now, the main reason, the single most important reason that I'm really excited to be here is because we are desperately, for many years, looking for yields where we can invest. To give you some context to this, the Swiss sovereign issued two sovereign bonds last week. One was a 10-year bond. The other one was a 42-year bond. The 10-year bond was 3 times oversubscribed. The 42-year bond was 2.5 times oversubscribed. And the yield we got on these instruments was, in the case of the 10-year bond, minus 0.25%. And in the case of the 42-year bond, it was plus 0.23%. So de facto, I'm giving away my money to the Swiss sovereign for the next 10 years, and on top of that, I'll pay them a fee of 25 basis points. And I have to go out to blocking my money for 42 years to get a positive return, and that positive return is then only 23 basis points. So whenever, in my role as an asset allocator, whenever I see an opportunity to invest in some higher yielding assets, I would see this as something very interesting, and I'm carefully looking at this to see whether this is an opportunity for us to invest. Now, if we want to put this a bit into context, you see here on this first chart 2 lines. The brown line at the bottom is what I get on the overnight rate in Switzerland, and currently I get minus 0.8%, so minus 80 basis points. And the blue line here is what I get if I invest sort of in the same market in Egyptian pound, and this yield, as you all know very well, is currently around 11%. So the gap between these two interest rates that I get is about 12%. So that in itself makes it very interesting for me. Then I'm obviously not naive, right? I don't expect a country, a corporate, whatever, to pay such a high yield for no risk. I mean, it's clear that there is some risks involved, but I'm also happy to, if the constellations are right, and I think this is interesting, to engage in such risks. So, for example, Egypt, as currently a country that is in a sort of single B rating, could be indeed interesting for me as an investment opportunity. Now, it was mentioned before that Egypt has gained one spot in sort of the ranking of the size of the economy. I think one place where you used to be very big or relatively big is with regard to the size of the local currency debt market. It was only a few years back when the Egyptian pound was the second most liquid currency in Africa, second only to the South African rand. But currently, the international interest in investing into Egyptian pound denominated debt is a lot lower, given several factors. So what I can do now is to tell you some reasons how I look at these local debt markets, how I assess them in my role as an asset allocator, to explain you a bit how we assess the risks and the opportunities. So essentially, what I do is I look at three factors. The first one is how I assess the currency. The second one is how I assess inflation and inflation dynamics and the central bank policy cycle. And the third one is how I look at the credit risk of the country. Now, when we talk about the central banks, there is one first parallel between Egypt and Switzerland in the sense that central bank decision making is hardly ever easy. Remember a few quarters back in January 2015, the Swiss National Bank decided to abandon its euro-Swiss franc exchange rate floor. And that was itself obviously a very difficult decision for the governor of the central bank, for Mr. Jordan. He knew back then, he knew already that he would, in a few months, he would be faced with the ECB, with the European Central Bank, introducing a quantitative easing program. And so his thinking was, in a few months from now, I have to decide whether I will come on a Monday morning, whether I would come to the office and buy French and German and, say, Spanish government bond worth half of the size of the Swiss GDP to defend this euro-Swiss franc floor. And so obviously then he decided he's not willing to take that risk to do this decision, and in a very surprising action he let the euro-Swiss franc peg fall and the Swiss franc strengthened tremendously, which represented a huge shock to the Swiss tourism industry, to the export industry, etc., etc. I think in Egypt the central bank also faces several very tough decisions these days. You have made one big step in March when the central bank decided to let the currency weaken a bit, also to hike interest rates. I think this is very welcome. It's a first step in the right direction. Obviously, you don't want to have higher interest rates, tighter funding conditions for the local economy, but at the same time, this will again give you access to international capital, to FX, and I think that's really important for the Egyptian economy as well. And so I think this decision will be very welcomed by international market. Looking at the currency further, you would think about where you would assess the valuation of the currency. Here I look at metrics like the real effective exchange rate. Say also in the case of Egypt, you can look at the parallel exchange rate, and you see on these metrics the pound looks fair to maybe still slightly overvalued. So maybe from that regard there is a bit more to come in the years ahead, who knows. Also, the other metric I would look at is the one on the external side, on the external balance sheet. And here Egypt still runs a very sizable current account deficit. So here, for me, this would be one clear indicator where I would really like to see some improvement going forward before I could go out and tell people to invest more into Egyptian pounds and local interest rates. On the inflation front, clearly inflation has room for improvement. If we compare the Swiss inflation rate with the one in Egypt, there's a huge gap there as well. But this is also not fully in your hands. This is a lot linked to commodity prices as well and other factors. But overall, I think with the central bank continuing to tighten monetary policy conditions a bit, that should also move in the right direction. And then on credit fundamentals, the overall risk for, say, the sovereign, I wouldn't be overly concerned there, but clearly as a single B-rated country, you do have room for some improvement there as well. So whatever you can do in the years ahead to help improving the credit fundamentals of the sovereign and also of the country itself, that would be most likely very highly welcomed. Now, moving to the second topic on labor markets, it's one of the key aspects why Switzerland always scores so highly in these competitiveness indicator. We have a very flexible labor market. We provide access to world-class education system. We have also a rather open market where international companies, local companies can move in and get and find the labor they need. So this has really